To my channel here at Trades2G. My name is Sammy. Today I'm going to give you my overall broad market perspective and what to expect for next week. And towards the end of the video, I'll give you my final conclusion. And I want you guys to think of this more of an educational content because I am doing something different and I want you guys to observe what do I see, what's forming on my charts, and how do I play this. So before I go ahead and chart, please like the video, subscribe to my channel, and join the Discord. Let's get straight into the TA. In front of me, I have SPY on the daily. And you guys are seeing a pattern called the ascending triangle wedge pattern or ascending triangle. Typically, these are just a pattern where candles or price action rejects or finds support at an angle of a trend. In this case, on SPY on the daily, we are seeing multiple candles of price action rejecting this top trend line, or candles touching this trend line and seeing rejection. Now, shout out to the commentators yesterday saying I need to put on my cursor. You guys can see my cursor. So I want you guys to notice how candles on this upper trend line are respecting it. We had this one candle that tried to break out, and then we came back in to retest that breakout, and then we failed. But we know we're in an ascending triangle because we have multiple touches, and then multiple touches on the top, multiple touches on the bottom. 4 or 5 touches would be considered a confirmation. Confirmation. But I want you guys to notice something. What do I see on the daily, on SPY? Before I take a trade, I always look at SPY. That's just my rule. I don't break my rule for nothing. And if SPY is bullish, then I'm in a trade for calls or shares only. But if SPY is bearish, I'm in a trade for puts. SPY is an ETF at the end of the day, if you guys didn't know that. But watch your RSI on SPY. Your RSI on SPY is telling you something. You just printed a secondary Class A bearish divergence. Let me repeat that one time. On SPY, multiple candles rejecting the top trend line. RSI is the opposite of the trend when you're making higher highs, but your RSI is making lower highs. That's considered a Class A multiple bearish divergence. But I want you guys to understand that retracements like this after scallops are not so bad, because here we had a retracement and we moved up, and had a retracement, moved up. But we didn't have the Class A bearish RSI divergence moving on up. This is the first leg, or at least this top trend, where we're seeing printed bearish Class A divergences. But I'm not done. Let's go back in time. I also drew an ascending triangle wedge from previous highs and lows back in August of 2024 and July 2024. And let's take a closer look. We had rejection, support, rejection, support, support, rejection. This wedge at the apex of these ascending triangle from previous price action gave you a massive move down, approximately 5%, which equated to about 23 to 25 days. 5% to the downside off this apex momentum, or I should say price action hitting apex off this ascending triangle. Ascending triangles can break, price action can break to the upper side, or they can break to the downside. It doesn't really matter as long as we understand that there's a trend. So if I have to consider a trade for long, I'm going to look at previous price action and be like, okay, does it make sense based on price history to place a position for long, knowing that if and only if we can potentially come back down because of previous price action off of an ascending wedge I see that we rejected the top end of the trend line. We come back to the bottom end of the trend line, and then we made a massive move down for 30 days, approximately 25 days. But we are repeating the same pattern, but this time we have multiple bearish divergences printing on the daily. We're at the apex. Price action is at the apex of this ascending wedge, basically the tip of the ascending wedge. And we rejected that upper trend line yet again. So if from a risk reward, I'm looking left and I'm looking at price action, I'm seeing a repetition. And repetitions are a hint. They're a telltale sign that if A, B, and C happen, then D is going to take place, up or down. But from a risk reward, I have to consider these factors. This is my livelihood. I have to be more right than I am wrong, because otherwise I can't pay the rent. So I'm considering all factors when I'm taking a trade. And first and foremost I see is that we are printing multiple bearish divergences on SPY. But I'm not done, because I've been holding this off, and I figured let me get straight to it. I've had this data for quite some time. If you've been doing this for quite some time, or at least you love your job as much as I do, you go above and beyond. I want to show you guys something on the monthly on SPY. Specifically the MACD on SPY. This is the MACD on SPY, and I want you guys to take a look at this blue line. And I want you guys to take a look at this orange line. The orange line is a signal. The most important one is the MACD. Regardless if you understand this chart, I just want you to understand the last time the MACD crossed the signal line was in March 2022. We made a massive retracement of 20% to the downside. Massive retracement since we crossed. We haven't crossed from the upper side up until 2025. Not only that, we're higher. The MACD is higher than the 2022 line. I want you to consider that the momentum, if we were to take place a bearish activity in the market, this would hit harder than this trend. Let me repeat that one more time. We're higher than the March 2022, so typically you're going to come down a lot lower. So from a risk reward perspective, I'm considering all these cases before I enter a trade, long or short. I'm considering the broad market sentiment, macroeconomics, before I take a trade. Before it used to be a lot of TA, and there's a meme going on in the trading community where it's Trump first, then the ETFs, and then you jump into your tickers, whatever you trade. But it's always going to be Trump first, because at any point in time, he can just say one tweet, send a tweet, and change the market dynamics in a heartbeat, in seconds. So we have the Joel Powell case going on right now, saying that they're pulling up fraudulent activities, rebuilding the Fed house, whatever have you. We have the Dixie, the dollar, going down. That's in the news. We have this ticker, Dixie, the dollar, going down. Even when Donald Trump announced that he wants to get rid of Powell, the Dixie dropped by a good portion for a second. It literally dropped for a second. You saw the candle react so quickly. That's where the market sentiment is. But overall, where I'm going with this is that just be mindful of previous price action before taking a trade. We are not mind readers. No trader, no influencer can tell you, hey, what do I think this is what's going to happen. I'm 100% sure. No, you're 50% sure that it might take place. But if your 50 is right, let's say I firmly believe, and I guess we're getting towards the end of the video, I firmly believe we're going to be in an overall very bearish momentum, and not crazy. I'm talking previous price action is only 5%. So if I'm looking at this from previously, I'm going to consider 5% retracement, which could be approximately right here. We'll reassess on Monday. But the point I'm trying to make is that no trader, no influencer can give you the accurate answer that you're looking for before taking a long. Monday can come and we can completely blow off this top on the trend line and make another new high. But if I'm right, we already rejected this top trend line at the apex from previous price action. We touched it, but what happens if I'm right? Breaking down on Monday. Something to consider. Before I take a trade, I look at the overall broad market. What I see in front of me, I'm leaning a little bit more bearish than I am bullish for the time being. And if I am right, I'm not considering a catastrophe. I'm just considering a small retracement, 5%. And if it's 10, we'll reassess. But I'm looking at the data looking left. And this is how you win in the market. This is how you stay long in the market, believe it or not. When you're only up, you never take profits. But what happens when the market comes down? Now you regret not selling. This is my livelihood. I have to make sure I do this more right than I get it wrong. And I love what I do. But always, always, please remember, I'm here to protect you. I'm here to protect me. And I want to educate you. So please take this, learn from it, and make the right decision. Thank you so much, guys. If you guys like my video, like the video, subscribe to my channel, and join the Discord. I did something a little bit new. This is my first time doing something or this sort of segment. I love the commentary from yesterday's video. It helped me improve a lot in what users or newcomers are seeing on my channel. What can I improve on? Let me know what else I can work on. I want to make you guys happy as well. So, thank you. Have a beautiful, beautiful day. Cheers.